going on, guys? GatieTrades here. I'm back with another video, part 4 of my series where I'm teaching you guys my entire trading system. We're finally at the part where I'm going to be teaching you guys my trading models and why I made them very specific, and every single step of each trading model, why I made it that way. If you haven't watched the last 3 episodes, I really recommend you do. I'm not just saying that for views, because you need to understand, especially step number 3. You need to understand how I get my session and daily bias for you to use these models with high accuracy. So please go back and watch step 3 at least. I recommend watching them all. Like, trading psychology is very important. My before routine is very important, especially the psychological reminder component. But today we're going to be talking about models. And I'm just going to say this now. So for the next 7 episodes, we'll be talking about each model individually. And I'll go into depth, everything I've learned over probably thousands of backtest trades and as well as 1 year of live trading. How I've narrowed it down to very specific criteria. So I'm going to talk about the criteria for each of you, each of the models. And today's 930 Judas swing and AMD model. This model forms pretty much every single day. And it's one of my favorite models because pretty much every single candlestick on the higher time frame has some form of AMD. And you can use that in pretty much any trading system. Okay, so I don't want to waste any time. Let's go straight to this. Now, as I talk to you guys about this PDF and what's inside here, just know that these models are very specific to me. You can always adjust how you like to. So the criteria for my 930 Judas swing / AMD model. So the first thing is I need to identify accumulation pre-market. Now, pre-market or 930, I forgot to include this. So the accumulation can begin at 930, can also begin in the pre-market. So just a quick example, you can see the accumulation here, and then we'll continue. Identified a clear drawn liquidity and directional bias. So that's the first thing. Can I identify a clear accumulation pre-market or forming at 930? That's step 1. Let's say that's checked. Step 2, identified a clear drawn. If there's no drawn liquidity or directional bias, how do I do this part? This is the most important step of every single model I'm going to be teaching. This is the most important step. If there's no drawn liquidity or directional bias, I wait. You'll hear me say it every time in my live stream. I'm waiting for more information because I'm 50-50. I always wait. Let's assume you have a clear drawn liquidity. Now we want to look at clear manipulation, taking out liquidity and or tapping a higher time frame PD rate after 9:30 a.m. If it happens before 9:30, I don't care. I'm not taking the trade. It needs to happen after 9:30 a.m. So a clear manipulation. If I can't visually say this is a potential manipulation, then I'm not taking the trade. After that manipulation, I want to see displacement after towards the drawn liquidity. And this needs to form a fair value gap or an inversion fair value gap. Otherwise, I do not qualify it as a displacement. That's how I define my displacement. After this, we move on to entry model selection 1 to 6. And from there, we look to take the trade. So, and this is my trade management part. This is going to be very dependent on how you trade. My entire risk, money management, and trade management, that's all going to be in step number 6 of my model. So don't worry about that too much right now. This little section is just kind of a little bit of a reminder. But here's a visual representation of the model. Now I'm going to go over very specific examples. So bear with me. Stay to the end of this video. Don't just take the criteria. I know a lot of you are just going to take this criteria and walk away. Please don't do that, because I'm going to be showing you guys exactly what to be looking for and how to identify this in different ways and different contexts, different narratives. So this is a very basic example. The drawn liquidity being these relative equal lows. We have an accumulation, clear manipulation, taking out data high. So we have a liquidity sweep and a higher time frame key level tag. There's an SMT there. I don't need an SMT. There just happens to be. So I've identified everything. Do we have an inversion fair value gap? Yes, we do. Do we have a bearish fair value gap? Yes, we do. So both of these steps were checked off. And then entry model selection 1 to 6. I'm not talking about entries in this episode. Just understand that this was the idea of the 930 Judas swing. So let's get to the charts. Okay, I hope you guys all made it this far in the video, because I'm going to be giving you guys very good examples. This is from this week. This is from this week. If you haven't seen the last episode, please, I can't emphasize enough, go back and watch the episode, because you will not understand some of the things I'm talking about. We've already discussed some of these profiles as the London low of day, which is why I was bullish in the New York AM session. So this AMD is very valid in terms of bias, and you understand why I consider this a valid manipulation and not this. Because some of you would see this, and then you would see manipulation here. which has happened at 9:15, so it wouldn't be valid anyways, but you get the point. So this is the manipulation I was able to identify and go long off of. I'll explain why. So this is a very basic model. Just you can see the accumulation pre-market, 6 a.m., and you have a liquidity sweep right here. Now in this case, if you go down to the 1 minute time frame, just give me a second here. So we have some examples and I'll go over them with you guys. This is what it looks like. Now this is hard to discover on the 1 minute time frame. On the 15-minute time frame, it's a lot cleaner, and this is very difficult price action right here. We actually took this long, if you guys remember. So we did take this long. This is why I was showing on the 15-minute time frame, but you can identify this accumulation pre-market 9:30 a.m. That's the key. I don't look for manipulation before 9:30. I don't even look at trades before 9:30. 9:30 a.m. opens, we come down. Did we take out liquidity? Yes. Did we hit a high time frame PD rate? Yes. That's both confluences hit. Do we displace back into the range? Bear with me again. I'm so sorry, guys. Do we displace back into the range with an inversion fair value gap or a bullish fair value gap? There's no inversion here. Displacement's not valid at this point, but we have a bullish fair value gap right here. So it's valid. It's valid because of this bullish fair value gap. So if you go back to my criteria, displacement after the manipulation towards drawn liquidity forming fair value gap or inversion. If there's no forming fair value gap or inversion, then I don't qualify that as a displacement towards my liquidity, my drawn liquidity. So very simple AMD model right there. This was Wednesday when we called out low of day being in the London session. So you can kind of see the London profile, London reversal there, and near continuation. Now, if you haven't seen my video on standard deviations, you don't have to, but so in a characteristic like this, there's a couple ways you can project this move right here. So we took a long over here and we took another long over here, and we were kind of using standard deviations to base that move. You can use standard deviations on the Judas swing from the high to low leg to the manipulation. This will give you around -2 to -3. You can also do it, now this is how I prefer, if you haven't seen the last video, again, I'm going to say it my last time, is the high to low of London session. So this is the London session, and this is your high to low, and I like to project it from there because this is your manipulation for low of day. So this is playing off a daily power of 3. We're not talking about that model right now. This is the daily power of 3 manipulation leg, and this is your New York session manipulation. So just something to point in there to discover how far the distribution leg can be as I use standard deviation. So let's go to the next example. Here's the next example. So we're going to go to the 1 minute time frame for this. Now, this is your accumulation pre-market. I know it looks a little bit difficult because there's a lot of wicks. Wicks do the damage. This was 8:30 news, PPI, but you can see, sorry, right here, it was CPI candle, but the accumulation is still there. You can see we're stuck inside this range pre-market. Ignore the CPI candle. After CPI, we're ranging. 9:30 a.m. comes. This is 9:30. I'm marking out with a black line. Wait for manipulation from 9:30 a.m. After 9:30 a.m. Boom. We manipulated. Did we hit a high time frame key level? Yes. 15-minute fair value gap right here. Did we take out liquidity? Yes. Do we have a fair value gap? Let me just do this to make it simple. Do we have a fair value gap going back into the range or an inversion fair value gap? In this case, we have both. This was an absolute A+ trade entry. So this is your accumulation, manipulation, inversion fair value gap right here. You could have taken this. That would have qualified the criteria. I waited until here. We took our entry right here because of the inversion and the bullish fair value gap. How do I do standard deviations? You can do it a couple ways. You can do it like this, off the manipulation of the New York session. So if you come over here, you can do it like that. From there to there, -1 lines perfectly with data highs. That's how I did my standard deviations for this trade. So that's the manipulation leg. And we were bullish for the same reason. If you have watched the last video, if you want to understand why I was bullish today, on this Thursday, sorry. So this is another example of an AMD. Now what happens over here? So I want you guys to know something. These are the macros. Now these are not necessities for my my trading models, but it's very valuable, especially when it comes to the AMD model. So notice the manipulation from 9:30 a.m. The clearest manipulation. So 9:30 is over here. We're pretty choppy in the beginning of 9:30, right? This is your 9:30 opening, this black line. I'll make it 4 times big so you can see. We accumulated originally at 9:30. and then we manipulated lower. What time formed the low? It's 9:50. This is a macro. 9:50 to 10:10 is the first macro after 9:30 open. That's the key for this price delivery right here. We deliver all the way. Look at this. 10:10 pretty much delivers you the high of this move, and then we go back into consolidation. So what can I look for here? This is another AMD model within itself using a macro. So notice it's not always 9:30 Judas swing to use this model. It can be valid for AMD, and you can look for a macro distribution. So what happens here? We have accumulation, we manipulate, and do we have a fair value gap going back into the range? Yes, right here and right here. This one I don't trust as much because it's not going back into the range. This one I trusted more because it was going back into the range. Notice how the macro delivered price, and then we had a full expansion towards the original drawn liquidity. And that's enough said about that. So let's go to the last example now, which is this last example here. So again, accumulation pre-market. You can see it very clearly. So what it would look like during the time is you would see this. Now some of you would say, oh, this fair value gap at 8:30. I'm waiting till 9:30. I don't even trade before. You see this? We're still stuck in this range. I don't include this wick. You can, but it's just because it's a PPI wick. So this is a roughly your accumulation phase. If you take off the wicks, we're accumulating. It's not 9:30 yet, and then right here it's 9:30. So that's your 9:30 open. 9:30. So notice the manipulation started a little bit earlier. That's fine, and I'll explain why. This was the higher time frame PD array we framed our trade off of. There's like a 4-hour fair value gap or something in there as well, but the key is we're moving lower below the 9:30 opening price into a key level. So we started moving lower from the range at 9:26, ignoring this, and 9:30 a.m. comes and we move lower and we begin to chop. And you're waiting for the distribution back into the range. So what does it look like on the 15-minute time frame? So you can simply wait. And this was a 10 a.m. News candle. You can see how much that expanded from this wick. But you're waiting to see if it can go back into the original consolidation. How could you have entered a trade like this? Now, I actually did not catch this entry because I tried to enter over here. But did our criteria meet? Yes, it did. This is our criteria right here. So we had a manipulation. It started before 9:30, but after 9:30, it still was in that manipulation phase. Now, this is hard to spot. For some of you, if you're not able to identify this, you can simply scratch out the AMD model for this trade at all, because the manipulation didn't start before 9:30. We actually started going lower at 9:26. However, looking at the 9:30 opening price, we still moved lower, and we started consolidating around the higher time frame key level, waiting till 10. Notice the macro. We're going to mark it out right now. 9:50 to 10:10. So 10 puts in the low, and from there we expand. We had a 10 a.m. candle. Where's the inversion fair value gap going back into the range? If this is your accumulation, this is your inversion fair value gap going back into the range. It doesn't qualify here because there's news. As soon as that candle inverses right there, this one right here at 10:04 a.m., you could have entered on that inversion fair value gap and now it's valid. Now, I did not enter that trade because I thought it was a little bit too choppy at the time, and I tried to get in here, and we ended up missing the move. But nonetheless, the idea was very valid. And of course, there's multiple ways to get in. So if you look at the standard deviations of this price leg, this being your drawn liquidity, which is previous day high, how could you have entered this move? So let's say you identified this too late, and this is where I entered the market longs, is this 15-minute fair value gap. I waited for it to come back, wait for the macro. In this case, I don't like to put in trades around 10:20 to 10:30. I like to wait for the macro if I already missed the move around 9:50. So I wait for the macro 10:50, and you can see we put in the low at 10:52. We expanded all the way into a premium array, and we ended up just consolidating after that, I think. So you can see there I gave 3 examples of the AMD model. Now, the AMD model and the Judas swing model is a very general model. I say that because my best AMD trades or my 9:30 Judas swing trades are aligned with other models, and that goes for all my trading models. So if you come to the charts on my PDF, you can see I have 7 models, and the last one, I put this last because it says overlapping models and confluence. ICT's concepts are very, very in conjuncture, if that makes sense. Like you can use all of these, and a lot of them is gonna have a lot of overlap. A 930 Judas swing, right, with the manipulation and the distribution going back, that's a low risk buy or sell with the smart money reversal of the market maker model. This can also form a 10 a.m. silver bullet. This can also be forming in a PM session. Like these are all the same thing. So there's many ways to trade, and all of these are gonna overlap. This is just one of the trading models where you don't need any overlap. You can just trade this, which is why I've included it. And it's very, very crucial for me because I trade at 9:30 to 11:10. That's my trading window. I'll hold trades through lunch, but I won't enter after. So if I'm in a trade, the first thing I'm looking for is a potential 9:30 a.m. Judas swing. That's the first thing because it's 9:30 a.m. So I'll always try to look for that first, pretty much. And let's see if I can pair it with these three models, which I'll be talking about in the next couple of episodes. So hopefully that helps you guys. These are the notes if you want to take a screenshot, or if you want this PDF, message me on Discord. I'm releasing them as the videos are released. So this is a 930 Judas swing AMD model. This is how I trade it. And if you have any questions, feel free to leave a question or comment below in the video. Till next time, peace.